Currently, we have enough land to do 19 projects. I did not have the capital. Our revenues for that year was $350,000. It's a model that basically takes the current rents into account and comes up with, is the deal feasible? I would tell people that to understand the business, do one project at a time, scale up, don't go overboard, and work hard and know every aspect of the business as to how it works.
That's amazing because you haven't been around for 60, 70 years. So that's like amazing, the kind of progression that you have guys made over the last 10 years. Welcome to the Ready Podcast. I'm your host, Vema. And if you're ready to level up your real estate knowledge, then do me a favor and hit the like button on this video and subscribe to the channel and hit the notification bell so you don't miss any more of this great content. Today on the show, we have Mr. Sam Kumar, who's a multifamily developer in Austin. To help our audience kind of get to know you better, can you talk about how you got into real estate and how you started your own company and become one of the biggest developers in Austin?
Absolutely, Vima. Thank you so much for having me on the show. Uh, I, I am glad you're hosting this, and man, you definitely look like a real pro out there
Thank you.
with the
Thank
setup and the way you delivered your first line. So,
you.
thank you. We I've worked with another firm for about 10 years after my
Mhm,
college.
mhm,
So I worked with this local developer from 1992 to 2000. And
mhm,
when I came out in 2000, I always wanted to start a development firm that that deals with multifamily and
mhm,
hotels primarily. Those were the two assets we were aiming for. But um, I did not have the capital when we started.
Most people don't.
Most people don't. So we started with what needed the less capital at the time was a construction company. So
Mhm,
Journeyman Construction, we started doing work with Journeyman Construction starting in 2001. Our
mhm.
revenues for that year was $350,000.
Okay, so
Which
yeah, which is really good.
which is really good. First year, yeah. We actually made money with it, and I had another partner, and we ended up buying out the partner. Said things, knowing that we didn't really need their money for the construction business,
Okay.
and then it took us about 10 years to really increase our net worth to a
Uh-huh.
point where we can go do development deals on our own. So in 2011 is when we started going out and looking for multifamily sites, and that's really
Mhm,
when we started on the multifamily development front. We closed on our land and the construction loan in 2012 for our
mhm.
first project called Silverado Crossing. That was in Buda, Texas,
Okay.
and that's how we came into existence.
Wow. So you start off kind of like you just kind of you tried it out and you had a partnership and then you slowly realized you had the capital to now to do this on your own and now you've been doing multifamily developments ever since.
Ever since, exactly. The first project
Yeah.
was it was very hard to get a loan, very hard to raise equity,
Mhm.
but we were lucky. We found an
Mhm.
insurance company that was willing to put in
Mhm.
mezzanine equity into our
Mhm.
project, and that kickstarted us. Of course, I had to sign everything in blood. We
Sign
all,
away your trying to sign away your kids as well, firstborn kid too.
yeah, exactly, exactly. But it proved to be worthwhile. We were just
Mhm.
coming out of the recession, and
Yeah.
2012 is when things started picking up in Austin.
Yeah.
Uh, to just to indicate to you
Uh-huh.
and your viewers how far we have come. The first deal that we did in 2011, we built it for $68 a square foot hot cost.
Wow.
Okay, the same product today, we're building it for $160 a square foot hot cost.
Yeah, that's double. It's Austin's a changing place. One
Yes,
of the things that makes me, which I'm really glad that you're kind of working this on this, like in building this development, is we're starting to have this like affordability crisis because there's just like there isn't that enough homes for people because so many people want to come to Austin that like there isn't places for them to live, and so they have to
right.
live far out or they can't they can't they don't know they can't find anywhere to rent.
Yeah,
So
very very true, very true. One of the things that we're doing with our organization is Kurt Gall is another partner with us. Kurt and I discussed the affordability crisis that we have, and we said at least one project a year we'll do it as an affordable project. So right
Hmm.
now we are on our fourth project
Okay.
as an affordability project. We call them workforce housing projects, where
Hmm.
we team up with either City of Austin entity or Travis County entity,
Hmm.
and we are able to set aside some of the apartments
Hmm.
for people making 60% median family income or less.
Hmm.
So we we have two tax credit projects that
Hmm.
set aside almost 90% of the units
Hmm.
for 60% MFI. And
Hmm.
then we have two projects that we're working with Travis County that are currently under construction, where we've set aside about 50% of the units and 60% MFI for affordable.
Okay, that is awesome. I think that's really good. It helps allow people that like they're maybe underprivileged have opportunities to get into something that's like reasonable cost for them. So that is awesome that you're making sure to incorporate that in your some of your developments.
Yes.
Uh, One of the things I'm curious about that you kind of mentioned is like, so now land is so hard to get and so hard to find, especially like at affordable prices. How do you go about now, like evaluating properties for your like next for future developments or even developments you've done in the past? What do you kind of look at from a metrics or like other than like sales price necessarily?
Yeah.
What kind of things do you look at?
Well, when you're buying land, obviously you look at the entitlements, you look at what you can build there, how many units you can put
Mm-hmm.
up, what is your per unit cost, is the land close to good schools, is the land close to grocery store, is the land close to the work areas that residents can travel to, are you centrally located? So those are all things that go into consideration. But primarily on the financial side, you're looking at can you build apartments there, and can you rent them for the
Mm-hmm.
dollars you can program it for? So it's a model that basically takes the current rents into account and
Okay.
comes up with is the deal feasible? Land is has always been in the 10% to 15% of the total cost
Mm-hmm.
of any project. So land is not everything. Land is definitely
Mm.
one of the basic things that you
Yeah.
have to program. So are the utilities there?
Yeah.
Are you exceeding your 10% to 15% cost? So those are all the things that go into play.
Okay, yeah. But you have to, yeah, that is true. I think land is definitely it is a factor because without that you can't do everything else.
That's exactly right.
But that's interesting to note that like even though like land is important, it's only a small factor in the cost. The majority is looks like on the more on the construction side. If you're saying it's only 10%.
Absolutely. So there was just to give you a little bit more color on that. There was a particular tract of land right in Buda that had, in addition to the city tax, that also had another development tax added onto it. Okay.
Mm-hmm.
And the apartments are so sensitive for the
Mm-hmm.
tax rate, the mill rate
Okay.
specifically. That one of the particular tracks that we looked at had about a 0.5%
Okay.
higher tax rate. So when we had the land under contract. Well, we got all the other costs and everything else, and
Mm-hmm.
when we did the feasibility of the land, we
Mm-hmm.
found out that the taxes that we'll be paying will be 0.5% higher, and
Yeah, that's a lot.
that's a whole lot. When you have a $50 million $50 million project,
Yeah.
and valued at 50 million, 0.5% is $250,000,
Yeah.
per year. So
Per
that's
year, yeah.
per year. So you take 250,000, and
Mm-hmm.
I believe at the time the valuation was around 5%, right? and
Mm-hmm.
at a 250,000 5% cap rate, that's a $5 million valuation. We
Yeah.
had the land, I believe, contracted for $4 million.
Mm-hmm.
And when we told the owner that, hey, the numbers won't work for us, he said, at what number does it work for you? And we said, if you give the land for free, it doesn't work. You know, so sometimes, that's how it works. So we had to
Yeah,
walk away from the deal.
that's how it goes. You crunch the numbers and you realize sometimes like it's just not meant to be based off just taxes and zoning can sometimes kill things all by itself.
Absolutely. But, little did we know, in the last 10 years, the markets we've been on, the market has been on fire. Rent
Yeah.
increases, and the cap rate decreases for exits
Mm.
have been so good. You couldn't make a mistake. So, needless
Yeah.
to say, there was somebody else who bought that land and built it and leased it and sold it and still made a good living. You know.
Yeah.
So
Yeah, it's one of those things you never really know. Like, I mean, the thing is with real estate is once you invest, you can't liquidate quickly. Like if you
right,
like you can't take it back. So
that's right.
you make when you buy land, you make a huge investment in that project because you can't get out easily once you
That's
made
that's
that
exactly
commitment.
right. There
It's
are
not it's not like stock market.
That's exactly right. You're kind of stuck with it
Yeah,
in a
so
way.
that makes it so you're really forced to be like, am I really happy with this? Do I want to move forward with this? And so sometimes you have to walk away from deals because there's just so even with anything you do in projects, there's always all these unknowns, and you just have to sometimes make a calculated guess as to how you think it's going to go.
Yeah, Vema, very true, very true. Currently, we have, I would probably say, with the different phases and everything, we have enough land to do 19 projects. Okay.
Okay.
But some are phased process. There's one parcel of land that's 98 acres. We
Hmm.
can do seven parcels, seven
Okay.
phases of multifamily.
Okay.
So if you take take those type of parcels away, we still have a good, um, 10 10 projects that we can build in different parcels of land. Okay.
Mm.
um, and out of the 10, three parcels, even at a good price, are not feasible in this market to make them work. So
Yeah.
we're actually going to go ahead and put them on the market to be sold. So
I say, yeah. Sometimes you buy it and then you realize afterwards that maybe it's just not the right time, and you'd rather sell that so you can do some other project instead.
yeah, it may not be a good parcel of land for us, but there are other people that could make that
Yeah,
parcel of land work for them, for their design, for their prototype. You know.
yeah.
So
Yeah, I think there's been land in the past that both like as you know, me and my mom we work together in development as well, but we do things more like RV parks or storage units. And sometimes we realize that like sometimes the land's become more valuable that it's better to sell it off to some type of like developer like yourself for multifamily rather than like maybe the original use case, which we had thought maybe like a storage unit or something. So
absolutely.
sometimes and it might work forward or backwards. It might be like so valuable that maybe someone else would be find more valuable to them.
That's exactly right. Especially, I think you all own some
Mm.
land in the Bastrop area now that Tesla wants to create their own town there.
Yeah, they're slowly trying to work in that area. They're trying to buy up all the land up there.
Oh, wow. Yeah, which is fantastic.
So one of the things that I thought you hit on was just kind of like the market. And I like to always ask all my guests about what you think about the future of like the Austin market's going to be, especially this year in particular with because like the interest rates have started to go up quite a bit. And I think it was the point of that was to kind of fight off inflation, but it's kind of hurting I guess like valuations of land.
Well, we are in a very interesting market.
Hmm.
One, obviously, you said it, the interest rates. The Fed keeps raising interest rates, and for a construction loan for a developer like us, it's pretty expensive to
Yeah.
go raise money and build a deal. So let's say a good bank, an average rate is going to be around 300 basis points over
Hmm.
what we call a SOFR. standard
Mhm.
overnight financing rate. So
Mhm.
SOFR today is around 4.75, 4.8%,
Mhm.
and add another 300 basis points, and that's 7.8% for your construction loan. Okay,
Mhm.
which is pretty high.
Yes.
But on top of it, we're in a very unique situation here in Austin where we are getting an abundance of supply in the multifamily sector coming up in the next 2 years. So
Okay.
we have averaged about 13,000 units per year
Mhm.
deliveries, and I've heard as much as 40,000 units net coming onto the market. So it could be 40,000 to 45,000 units that may come up in the next 2 years.
Okay.
So that's going to leave us a pretty good supply. So rents could come down,
Mhm.
and it's good for the renters. Rents
Yeah.
could come down, and there may be some oversupply issues that we might take us maybe 6 to 9 months to work out after the 2 years are up.
Mhm.
So, but on the flip side, I've heard my friends in the brokerage industry tell us that 2026 we're going to be delivering short of what we normally deliver,
Mhm.
primarily because the starts this year has been extremely low. So,
Yeah.
because the construction interest is high, so we're kind of bullish to go ahead and start a few units this year, so we
Mhm.
could be ready in 2026 when the market is when the supply is a little down.
Yeah, because just kind of looking at some of the housing market data, the sales prices, like the average sales price, has fallen compared to like last year,
Yeah.
quite a bit. And I think it's just because that is just more to because of raising because of the interest rates have risen. Buyers' buying power is a lot smaller, and so they've
Yes.
kind of had to adjust accordingly.
We have
So
seen on the
yeah.
multifamily sector, Vema,
Mhm.
to accentuate your point there. In the multifamily sector, we have seen prices fall from last year 10 to
Mm.
15%.
Okay. Okay. Yeah, I mean that's good. That's good to know. I think I'm curious if you think like a lot of people are kind of predicting or like thinking that a recession is going to occur this year overall, just like in the not necessarily in the real estate, but just overall. And I'm curious what your thoughts if you think that might happen or you think this is just like a small blip.
Well, I think the uh, Fed wants to control inflation, right?
Yeah, I think that's a good thing. Yeah.
And for them to get a handle on inflation, um, they are hoping for a big slowdown, and
Mm,
a recession is the punctuation mark for that slowdown. So I hope it happens
mm-hmm.
rather quickly than later,
Yeah.
because looks like our inflation is not taming as well as the Fed thought they could tame it.
Yeah.
So I'm hoping that there is a recession in the next 2 or 3 quarters, and I hope
Mm-hmm.
it doesn't drag on into next year.
Mm-hmm.
And for our market, for multifamily, recession or not, no recession, we still need apartments for people to live in,
Yeah.
and it doesn't change our industry, in my opinion. We may have
Mm,
some collection issues if people lose their jobs,
yeah.
but I think in a market like Austin,
Mm-hmm.
especially middle income jobs are always
Mm-hmm.
going to be hard to come by, and hopefully people don't lose their jobs, and we keep up the jobs in the at least in the middle market, and
Mm-hmm.
in a good way.
Okay. Yeah, I think you're right. I think like some type of correction was needed, 'cause especially like once like COVID happened, all of a sudden like prices just skyrocketed when there hadn't been much like change in values. There was probably going to be some correction at some point.
That's right.
And then Austin's such a unique market in the sense that like we have a college university, we have all these tech companies that there's just like a very natural drive to want or people just want to be in Austin. It's big. I think it's now in the top 10 cities now. I think I have to check on that on the count, but we've grown so significantly, and I think that even if a recession were to occur, it would be very mild in Austin in comparison to other cities.
We we hope so. We hope so. And In Austin, the good news is even if the with the supply and the
Hmm.
job growth and the recessions, those are all micro issues in my opinion.
Hmm.
The macros are still strong.
Yeah.
The demographic projections are still strong. 2030, we're expecting about 2.7 million people in the Austin metro.
So,
2040, we're
uh,
expecting 3.6 million people. 2050, we're expecting 4.5 million people. So I think the macros are there. I think
okay.
housing is much needed here in the metro, and I think
Hmm.
the housing market will continue to do well.
One of the things I'm curious is like, so when you're kind of like putting these numbers, you mentioned what the future is going to look like. How are you pulling these numbers? Are you using like U.S. like consensus data, or how are you doing this, or how are
Yeah,
you kind of formulating these numbers?
these are all numbers put out by the chamber and the U.S. Census and
Hmm.
the population projections. Uh, Whoever does those charts, but these are all you can find them with our chamber on the chamber website as well.
Okay, nice. And so you've, because one thing is like because you started like really on your, when you went on your own, it was like 2011 and on. And so you've been able to kind of evaluate like the chamber's data over like the last 10 years or so. And you think they're really good projections?
Absolutely. Um, this is a rough projection, and you can even Google this and find out. Since the 1940s, if you take Austin as a city and the metro
Hmm.
as a city, you know, roughly they say we have doubled in size every 20 years.
Okay.
Um, Keep in mind, we probably didn't do that in the last 20 years, but we were
Yeah.
close. In the next 20 years, they're not projecting us to double in size, but it'll be close again.
Okay.
Uh, there's a historical trend,
Hmm.
and there are current projections.
Okay. No, that's awesome that like you have the ability to really like check, because you've used data to say like, hey, in the next 10 years this is going to happen, and then 10 years has gone by and you've been able to verify if that's true or not. Because sometimes like they put these numbers out and it's hard to know, but you've kind of like been able to test it out, and they've been fairly accurate.
Absolutely. And Mima, one other thing I'll tell you is another broker friend shared this with us, and I thought it was very insightful information,
Mm-hmm.
which is they said, what we've seen is, and the way they've correlated it was very interesting. They said for every four jobs
Mm-hmm.
created here in Austin, we need one apartment complex. I mean,
Oh,
one apartment unit,
really?
not
Every
one.
four jobs?
Every four jobs, we need one apartment unit. So in other words, if we
Mm-hmm.
create 50,000 jobs last year, we needed
Mm-hmm.
12,500 units. Okay.
Okay.
Uh, uh, so, so we're not obviously creating 100,000
Yeah,
jobs
yeah, yeah,
to absorb all 20,000 units, right?
yeah.
This year, that's why we're saying we may have an oversupply this year and the next. So
I see. Well, you're not the, yeah. Fortunately, like you're not having to supply all those houses. There's other developers out there too to help
that's right.
with that
That's right.
too.
Yeah.
And you guys are, I think I remember from your presentation, you guys are right now number two in the multifamily, but you're hoping to be number one hopefully by the end of the year.
Yes, this year with the number of units that we would have under development and
Mhm.
the number of units that we would have started, um, we hope that we are very close to we are either number one
Mhm.
developer by the number of units that we do,
Mhm.
or again probably the second
No.
a place developer. So
No,
we are
that's
definitely up there. I'll also tell you this: there are one or two developers that don't participate in the survey.
I
We
see.
actually don't know how many units they develop,
Okay.
but I think as far as Austin goes, we are either number one or number two in terms of the
No.
number of units.
No, that's amazing because you're relatively, like you said, like almost like about a decade old now, and so that's like you're not like you haven't been around for 60, 70 years, so that's like amazing what the kind of progression that you have guys made over the last 10 years to be in
Right,
that position.
and we I'll also make another distinction. We
Mm-hmm.
only concentrate here in Austin.
Mm-hmm.
So all our units are here,
Mm-hmm.
but there are several developers that are much larger than us. They
Mm-hmm.
actually may not do this many units here in Austin, but
Mm-hmm.
overall nationwide, they probably do four,
Mm-hmm.
five, six times the number of
Okay,
units that we do,
I see.
because they're spread out.
So I'm curious. Do you think? Right now you say you mainly focus in the Austin area. Do you ever think you're going to expand further out, or are you guys going to have this be your niche?
At this time, we hope to be here in Austin.
Uh,
We'll see what the future holds, you know. So
mm.
if we do, we will look at DFW area.
Okay, nice. I know we're getting close to kind of our time, so I got like
Sure.
one or two more questions before I let you go. So, like, for someone that is like someone like I think who wants to kind of like follow in your footsteps and become like a developer of some type, do you have any like kind of like suggestions for them for how to get started? Because especially like with real estate in general, it's always the kind of the biggest problem that most people have is like how do I like the equity or how do I get started?
Yeah, absolutely. I would tell people that to understand the business,
Mm-hmm.
do one project at a time, scale up as you
Mm-hmm.
see fit. Don't go overboard, and work hard, and know every aspect of the business as to how it works.
Okay.
That'll be the primary thing that I would tell them to do.
Okay. And one of the questions I like to always ask my guests is like, if they a lot of the people I work that I interview, they're big into like books and learning, and I'm curious if there's any book that you're reading or that you have read that you recommend to other people that they should read to like learn about business or just about anything to help them be more productive.
My business career got shaped to a certain extent by reading great biographies, right?
Mm-hmm.
One of the biographies that still stand in my mind is Lee Iacocca's
Okay.
Chrysler,
Uh,
how it did and everything else. And then there is another great book called Nuts.
nuts.
And
Okay.
Nuts is basically uh, um, uh, uh, the Herb Kelleher, the gentleman that started Southwest Airlines, how they
Okay.
came about doing it and how they did it. And another one is Sam Walton's book. Uh,
Okay.
um, I don't remember the name of the book, but it's how they started Walmart. I mean, these are all classic
Mm,
biographies, but it kind of gives you an idea. It breaks down business into not this mystery, mystique thing that
yeah.
everybody is thinking about. It's actually small ideas put in
Mm,
play, and business leaders actually take small things and break it down into
mm.
smaller ideas and business ideas uh, that actually translate into successful, profitable enterprises.
Yeah, I think there's definitely a mystique to like starting a business. I think most people I talk with, so I think like those type of books kind of go into how to do it and like the strategies behind it, which I think are
Yeah,
really
they
useful.
they they actually talk about, what did they do in their businesses.
Yeah.
So and that's the best part about it.
Uh,
Oh, this idea is something that I could even have come up
yeah.
with, but that worked for that particular business. So it just in my opinion, it demystifies some of the business aspects
Mhm.
for any successful enterprise.
Awesome. It's funny. There's a book I'm reading right now, which you might appreciate. 'Cause I know you're a big tennis fan and you play often. There's a new book I've been reading. It's kind of a sports psychology book, but it's called like the inner game of tennis,
Yeah,
and it talks about I don't know if you've read it, heard of it
I've
before,
heard of it, I think. Yeah,
but it's a great book because it really breaks down like the psychology of of sports and how like and they use tennis as like the main example of like how they break down certain things in terms of like how to play the game, how to be aggressive, how to and kind of what kind of things to focus on when you're like in a match.
yeah.
And
I've
it's
heard
mm,
some people complain that I don't know if it's the same book or not. That
mm,
it gives you strategies about going to the taking breaks, and at what
mm,
point do you take breaks just to
yeah.
win the game. I think there's a little bit of unsportsmanship qualities
Yeah,
in there
yeah,
that
yeah.
may
So,
be questionable.
yeah.
But other than that,
Well,
if
it doesn't break the. It doesn't. It's not like that in terms of like these kind of tactics. It's more of a overview, kind of
Okay,
like.
okay,
It's more of like things that talk about like you want to get to the point where you're no longer thinking about like the technique, and you can go how to go into flow state,
okay.
and it kind of breaks down from that perspective, not necessarily from in game like tactics.
Got it. There is another book
Uh
that
huh.
some people have read, and that's about winning. Okay, the
Yeah.
strategy of winning in tennis, and the author that had written up had given all these other tactics as well. So
Yeah.
maybe I misunderstood that.
Okay. Yeah. I'll have to. We'll have to play tennis again too. So yeah, you got me in the first game. So I'll have to get you the next time.
Absolutely, absolutely.
But before I let you go, do you have any like if people want to get in touch with you or reach out to your company, like what are like the best ways for them to reach out to you?
They can always send an email to uh, my assistant T Fincher at journeymanco.com, and
Okay.
Tiffany will find a time. Most of the questions are Tiffany is able to take care of
Okay.
and answer. But if there is something that I need to get involved with, and if there is an investor that
Mhm.
is interested in investing with us, then I'll definitely talk to them and let them know how it works.
So what I'll do is in the show notes from this, I'm gonna put down her information so that if people are interested in kind of being an investor or getting to just if they need to get to know you or get to know something about your company, then she can be the first point of contact to reach out to you.
Perfect. Perfect.
Awesome. Well, with that, as I mentioned before, guys, please like this video and subscribe to the channel and hit that notification bell so you don't miss any more of this great content. Mr. Sam Kumar, it was great, awesome for you to join the show, and I was glad to have you.
Thank you. Thank you, Vema. Appreciate you having me and enjoyed it.